And life insurance companies are in focus. They've released data for the month of May, reflecting a premium contraction of 4% on a year-on-year basis. Yash is tracking this story. He's here with us with more details. Yash.
Well, Ekta, 2 months into FY24 and the numbers from the biggest life insurance company, that is LIC, has been a drag on the industry. As far as the industry premium in the month of May is concerned, it contracted by 4% on a year-on-year basis. For the first 2 months put together, it's down 15% on a year-on-year basis. Private life insurance companies, they've grown decently, growing at 9% both in the month of May and the first 2 months of FY24. But let's speak about the drag first, that is LIC. For LIC, the May premium was down 11% on a year-on-year basis. First 2 months of the financial year, the premium is down 28%. As far as retail AP is concerned for LIC, that was also seeing a contraction of about 1%. As far as the biggest drawback for LIC is concerned, that is market share. LIC in FY24 so far has lost market share of 746 basis points on a year-on-year basis. HDFC Life, the premiums were strong in the month of May, growing at 26% on a year-on-year basis. So far in the financial year, the premiums have grown 14%. As far as retail AP for HDFC Life is concerned, that is also up about 10% in the month of May. ICICI Prudential Life Insurance, weak numbers from the private lot, May premium down 19% on a year-on-year basis. First 2 months of FY24 down 18% on a year-on-year basis. May retail AP, that saw a growth of about 4%. Max Life Insurance, strong premium in the month of May, growing at 16%. First 2 months of financial year, the premiums have grown by 9%. The May retail AP grew by a meager 2% on a year-on-year basis. Finally, the strongest contender out of the lot, that is SBI Life Insurance, the May premium saw a growth of 58% on a year-on-year basis. First 2 months, the premium are up 36%. May retail AP also saw a growth of about 8% on a year-on-year basis.
So what are the brokerages making of all of this, Yash?
Well, Sonia, a very interesting note came in from Morgan Stanley. As far as industry view is concerned, they say that the industry remains attractive. They are overweight on HDFC Life, SBI Life and ICICI Prudential Life. Morgan Stanley says that SBI Life is the top pick, which is followed by HDFC Life and ICICI Prudential Life. Now, they've identified two key catalysts for FY24. The first one is pick up in retail protection segment, and the second one is 15% plus APE growth, especially in the second and the third quarter of financial year 24. As far as the target price is concerned, they say that the current target price for all these three companies lies between 20 to 34%, and they see significant potential for further upgrading the target multiples. There was another note which came from Kotak Institutional Equities. Their view on the sector again remains attractive. As far as HDFC Life, iPru Life, Max Financial and SBI Life LIC are concerned, they have buy call on all these companies. Fair value for HDFC Life, they've set it at 725, for ICICI Prudential Life at 610 rupees, Max Financial and LIC at 1000 rupees, and SBI Life at 1500 rupees. Finally, two key points which they put in the note. The first one is they say that the business momentum has picked up in May 2023, and also they see pickup in the retail protection in FY24, similar to what Morgan Stanley also points out in its note.
All right, Yash, thanks a lot for that.